Good morning and welcome to Markets Now. I'm Michelle Rook along with Randy Martinson Ag. We are seeing livestock futures mostly lower except for a few of the live cattle contracts, but we're scoring new contract lows in hogs once again over in the grain futures. We're down in corn and soybeans, a little higher in the wheat market, and kind of a quiet start to the day here, Randy. I'm certain that some of that has to do with just some scoring up ahead of the WASDE tomorrow, right?
I think so. I mean, right now we kind of have an idea what the WASDE report's going to tell us, or at least some, kind of direction. And that is, it's likely we'll see wheat stocks increased a little bit, corn and soybean stocks decreased a little bit. Just a matter of where USDA is going to put these as far as the, what category they show the increase in. It's likely they'll increase feed demand on corn. Not so sure, maybe residual on soybeans, and then lower exports on wheat is kind of the expectations right at this point.
Yeah, I think the big question was how do you take those lower quarterly stocks versus a year ago from the quarterly stocks report and put those into the bottom line on the ending stocks number? But USDA oftentimes can be fairly conservative there, can't they?
They can be, and I would expect that they will be here. I mean, we've got, we're just going into the start of the new season. We've just got our prospective plannings report out. We'll see I think it'll be more important to see where the June stocks come into play, especially for corn and for soybeans. But we do show that maybe demand has been a little bit better or supply was a little bit shorter. So that will dictate a little bit of an adjustment, but I don't expect for a big one, as I think we're going to be depending more on U.S. weather now for direction.
Absolutely. And we'll talk about weather in a moment. But before we move away from the WASDE, the other thing we're going to be watching here is South American production numbers and talk about what you expect there.
Well, you're right. I mean, that's going to be a big one as everybody's kind of sitting on the edge of their seat waiting to see what USDA is going to do. We expect that Argentina production numbers are going to decrease. There's some pretty large, expectations for cuts as far as the soybean crop is concerned, corn not so much. But for Brazil, the question is going to be, will USDA raise it? And right now, the average trade estimate has both corn and soybean production going up about 1 million metric ton. That's going to be, that'll be what's watched probably closer than the U.S. numbers.
Yeah, and Argentina, although USDA is stair-stepping it down, boy, they're not as aggressive as a lot of those private estimates, are they?
They're not, and USDA never is as aggressive as boots on the ground. So I would expect that we'll probably see a 4 to 5 million metric ton cut in the soybeans, maybe 1 and 2 in the corn. We know that the crop isn't as good. We've been hearing yield results coming in much worse than anticipated. So I think in time USDA will get there, but they are going to slow walk it.
Weather is really the main focus right now here, and that was part of the reason we broke down in the corn market last week, wasn't it?
It was. I mean, we started to hear, rains for the safrinha corn crop area, which will certainly help that newly planted corn. We're talking about dry conditions for the Delta and the U.S. Corn Belt region, which means planters will get rolling in the U.S. Now they're kind of verified the dry conditions for the U.S., which is helping to support the wheat because that means less rain for the winter wheat region. And for us up here in the Northern Plains, we are seeing warmer conditions. We're seeing some decent snow melt, but we do have rain in the forecast for the end of the week.
Yeah, and you've got to be frustrated up there in the Northern Plains where how long will it be before you actually get in the field?
Well, right now, I'd bet that we probably won't be in the field until for a month at the earliest. And that's, barring any other new major snow or rain event.
So as we mentioned, weather was one thing that kind of turned the market over last week, both corn and soybeans, but also, we'd had a pretty good run. And so we did hit some chart resistance. We saw some profit taking, didn't we?
Oh, we did. And we also saw some hedge selling. I mean, the markets got to a point where it did encourage a little bit of farmer selling, especially, Minneapolis wheat trading above $9. That triggered some sell spots. Corn, May corn triggering above 665 resulted in a little bit of hedge selling. So, yeah, we got to decent enough levels where it did encourage some producers to advance sales.
So wheat market trading a little bit higher this morning, as you said. Weather is part of that with dry conditions or forecasts expected here for HRW areas. But we also have ratings out again today. Are you anticipating that we're going to see maybe a little bit lower rating once again or not?
Yeah, I do. I mean, I don't think their weather was any conducive to help advance the crop. So I would expect to see at least a 1 to 2% decline in crop ratings again this week. And if we don't see much rain start to come in, I think Kansas's crop is going to continue to deteriorate. So that's going to be another big thing that the market watches going forward.
Yeah. And then we also kind of ran up into some chart resistance, and HRW spring wheat kind of hit resistance last week too, didn't it?
It did, I mean, yeah, we traded the 9 in the September, or in the Minneapolis. Pretty much all the contracts are trading the same level, but we did hit resistance in Minneapolis. Kansas City did too. Chicago has been kind of the poorer market. I mean, it's the one that's been the short leg of the spread, so it's been seeing a little bit more pressure than the others.
Yeah. Forgot to ask you, but Russia sounds like they're going to increase their export tax on wheat. Do you think maybe that's a little supportive this morning or not?
It is, and Russia's been playing some games there. Not only are they, they talked about discontinuing exports, but they were looking more at selling above cost of production because of the big hit that the markets have took, earlier in March. And I think that added to it. But yeah, they're going to increase their tax. That'll slow things down a little bit. But I don't think it means that they're running out of wheat. It's just that they want to kind of control the narrative a little bit more.
Gotcha. Well, we'll see how far we can run today here, especially with those resistance areas that you and I talked about. The cattle market, we are seeing kind of some mixed trade this morning. This market, though, had a big day on Thursday, gap higher opening, new contract highs. What are you expecting here for this week? Are we getting close to a top at all?
I don't think we're getting close to a top, but I do think that we could see some profit taking and a little bit of retracement. I think if we can get cattle movement going again and we can get feedlots back, being able to market on a more consistent basis, that will maybe put some pressure in on the cattle markets. But I think we're stair stepping up, kind of like you mentioned. I mean, I'd look for this market to maybe see a little bit of profit taking once we trade down $5 to $7. It seems like we find the support and the buying strength to bounce back up again. So I think that's kind of how we're going to trade this market going through the summer.
Cash trade was certainly impressive, though, the last 2 weeks, and especially some of those record prices that we hit up in the north this last week.
Yeah, and that's really what drove the market. The Packers were short bought. They needed to buy product. You had a winter storm coming in, which was going to slow down movement. You had the Easter holiday and another snowstorm that came into play. So Packers were in trouble. They needed to get product, and the the performance hasn't been as good. So there wasn't as big a show list. And I think that what's helped push the cash market the last 2 weeks. If we can get things back online, now I think we could slow down the cash side of things, or at least that surge in cash prices.
Yeah, that and the fact that the box beef prices had come on pretty strong here, but how much more do you see the boxes being able to put on here before you start running up into a little bit of maybe demand concern here with too high price meat?
I think we got a little ways we can go yet. I mean, I think we're looking at a lot of the, feature that's going to hit during the beginning of the barbecue season, which is going to push a lot of beef into the market. So I think that will be able to support things short term. But I think once you get into middle of May, that's when I think we could start running into a little more trouble on the box beef prices.
Yeah. You also got to wonder if we've been seeing some cattle hog spread action going on. Cattle to the plus side, hogs maybe to the downside. And of course, we scored new contract lows in hogs on Thursday, and we're back in that area here again this morning, aren't we?
We are, and I think that is it. We're seeing a lot of selling the hogs and buying the cattle on a spread. And you would think that spread's getting to be record levels. Like you'd think you'd start to see a little bit unwinding of that. But at this point, we haven't seen anybody willing to do that.
No, and the funds, they're still record short in that market, or near record short, it looks like. But the big key, too, is we got to get the cash market to bottom here, right?
We do. Yeah, and get some pickup in demand, and hopefully get some exports picked back up again. But yeah, that's going to be the key, is that you need to see somebody willing to come in and start buying the product. And until that happens, it's going to be a tough sled for the lean hog market.
Yeah, it was sad on Thursday to see a marketing year high in exports and still scoring new contract lows there in the June hogs. It's just unbelievable. All right. Thanks for joining us, Randy Martinson with Martinson Ag, and that is Markets Now.